Here's 4 common questions about your W-2. Why doesn't my health insurance show up on my W-2? If you're looking at your W-2 and wondering where your health insurance deductions went, chances are they were taken out before taxes. Most employer-sponsored health plans allow you to pay your premiums with pre-tax dollars, which lowers your taxable income. Since the IRS doesn't tax that portion of your earnings, it doesn't show up in your taxable wages on your W-2. For example, if your salary is $50,000 and you contribute $3,000 towards health insurance, your taxable income shows up only as $47,000. This means that you may not see your health insurance showing up because those contributions were taken out pre-tax. If you're trying to track the total cost of your health insurance, including what your employer pays, check box 12 on your W-2 for code DD. This code shows the combined amount of what you and your employer contributed. The information contained in box 12, though, is just for informational purposes and doesn't affect your taxable income. Why doesn't my W-2 match my last paycheck? Like the section above, these discrepancies can often be attributed to pre-tax deductions. When considering possible pre-tax deductions, you'll want to consider things like health insurance, 401k contributions, and commuter benefits. If these benefits are pre-tax, they won't show up within your taxable wages on your W-2. There are also non-taxable benefits, like if your employer reimbursed you for expenses or per diem payments that may appear on your paycheck but not on your W-2 because they're not considered taxable income. If you received a bonus or had any payroll adjustments at the end of the year, those might be taxed differently than your regular wages. Some companies apply a flat tax rate to bonuses, impacting how your total wages appear on your W-2 versus your paycheck. To double check, take your last pay stub and subtract any pre-tax deductions. Make sure to take note of any non-taxable benefits as well, just to ensure all your ducks are in a row. Where does the first check in January go? This is where payroll timing gets tricky. Your W-2 reports when you were paid, not when you actually worked. So if your last paycheck of the year is dated in January, it counts as income for the next tax year, even if the work was done in December. Likewise, if you were paid in December for work done in January, it will still count towards the current tax year. Really, the best way to think about this is simply not when you worked, but what the check date is on your checks or pay stubs. That's how it's interpreted for your W-2 as well. When it comes to planning for these differences between when you actually worked and your check date, you want to make sure any sort of contributions you're planning to make near year end are applying to the correct tax year. Certain accounts, like a 401k, may have yearly contribution limits. As such, it can be important to note when your contributions are going in, whether they're contributing to your previous yearly limit or your new one. Why is my net pay less for the first check in January versus my last check in December? If your first paycheck of the new year looks smaller than your last one in December, it's likely as a result of the Social Security tax resetting for the new year, or also your 401k contributions restarting. There's a wage cap on Social Security tax each year. For 2024, the cap was $168,600. Once you hit that limit, those taxes stop coming out of your paycheck. Once January rolls around, though, the cap resets and those deductions start again, meaning a lower take-home pay. And if you maxed out your 401k contributions by December, you probably saw a nice bump in take-home pay. But in January, those contributions start fresh, reducing your net pay again. Each year, tax brackets and withholding amounts can change, which means payroll systems adjust accordingly. If federal or state tax rates go up, you might see a little more taken out of your paycheck. Plus, benefits like health saving accounts and flexible spending accounts also reset in January. So if you opted for payroll deductions, those will kick back in as well. It's good to keep an eye on what your contributions are for certain accounts, like a 401k, just to ensure you'll be ready for any possible decrease in take-home pay entering January. So, are you now curious to dive even deeper into taxes? Of course you are. Whether you're an employer or an employee, it's good to stay caught up on what payroll taxes are so that you are informed on the sorts of things that you can expect to come out of you or your employee's paycheck. Check out the full article in the description and like and subscribe for more content like this.